Now, on the Bitcoin miner news, Bitcoin miner Riot blockchain delays earnings reports to sort out how much crypto Rout devalued its assets. Excuse me. Whew. And a crack. Its rivals, Marathon, Cypher, and CleanSpark all managed to get their results out this week as expected. Bitcoin miner Riot blockchain delayed its quarterly earnings report because it needs more time to calculate how much the cryptocurrency Rout, the war in Ukraine, and other macroeconomic issues have cut the value of its assets. The delay was disclosed in a Tuesday filing with the U.S. Securities and Exchange Commission, less than a week after the company said it had planned to release the figures on August 9th. Riot's rivals, Marathon Digital Holdings, Cypher Mining, and CleanSpark all reported their earnings this week as anticipated. Riot became one of the industry's biggest miners when it bought a gigantic facility in Rockdale, Texas in May of 2021. Bitcoin miners have seen their margins slashed as the price of the world's biggest cryptocurrency by market value has dropped, while energy prices, a major part of miners' costs, have soared globally due to the war in Ukraine. Last week, Riot said it mined 28% fewer Bitcoin in July than usual. Riot curtailed its energy consumption, earning $9.5 million in power credits as heat waves swept through Texas, increasing the state's demand for power. During the same month, 12,146 of Riot's mining rigs were offline as they were transferred from New York to Texas. Riot's stock fell about 2% following the disclosure of the delay. So if we're looking at all the mining companies, obviously Riot's a little bit behind. It probably helped them out today to push it off as we start to see Bitcoin right now just cross $24,000. If you take a look up here, which is pretty crazy. And that is all, of course, due to the CPI that we'll be talking about in a little bit. Now, their competitor CleanSpark raises their year-end hash rate guidance and sets a 2023 outlook. The miner suffered a $29.3 million loss for the first fiscal quarter, or for the fiscal quarter. I think that's actually Q2, excuse me, not first fiscal quarter, partly driven by the previously disclosed decision to sell its energy assets. Reporting results for its fiscal third quarter. There we go, third quarter. I am behind. Time flies when you talk about crypto, huh? It said it will sell its energy business assets in order to focus completely on Bitcoin mining. CleanSpark got its start in 2014 providing energy products to homes and businesses. It entered Bitcoin mining in 2020, according to the company website. Today, more than 90% of revenue comes from Bitcoin mining, CEO Zach Bradford said during Tuesday's earnings conference call. The firm reported a $29.3 million net loss for the third quarter of its fiscal year, in part driven by the reclassification of the energy business to be discontinued, which resulted in a $10.6 million impairment charge. The miner's adjusted EBITDA was $15.2 million for the quarter, down from $22.5 million in the previous quarter. Revenue of $31 million missed analyst estimates for $34.5 million, according to FactSet data. Adjusted EBITDA of $15.2 million was down from the $22 million of the previous quarter. I think that was stated twice, essentially. CleanSpark differs from some other Bitcoin miners as it has been a consistent seller of mined Bitcoin to raise cash. It thus entered a current bear market with less debt and had been in acquisition mode, which is incredibly important right now. That means that when they were, in the bull cycle, they were continuing to sell their Bitcoin and have a better cash position, which clearly puts them in an advantaged position in relation to someone like Riot blockchain, right? The latest deal was announced earlier Tuesday, the purchase for $25.1 million on an active 36 megawatt Bitcoin mine in the U.S. state of Georgia, as well as 3,400 mining rigs currently running at the site. The company upped hash rate guidance for the year end of 2022 to 5 exahash a second and issued guidance for the end of 2023 when it expects to reach 22.4 exahash a second. CleanSpark differs from some other Bitcoin miners as it has been a consistent seller of mined Bitcoin to raise cash. It thus entered this current bear market with less debt and has been in acquisition mode. The latest deal was announced earlier Tuesday, and the purchase for $25.1 million of active 36 megawatt Bitcoin mine in U.S. state of Georgia, as well as the 3,400 rigs currently running at the site. So they are in acquisition mode. We've talked about moves in acquisitions, M&A, all that sort of stuff with these companies. And the ones that are able to do it are the ones that were getting themselves into a cash position during the bull run. So as a small miner, what can you learn from that? That means that you prepare yourself for the bull run to set aside a bit of a cash position to capitalize on the bear market. It's a mistake that I think a lot of us have made, maybe didn't move into a cash position hard enough. And it's clear to see the writing on the wall for what you should be doing as far as, you know, a bear market versus a bull run, and how you should be planning out for that. Of course, that's not financial advice. We are just looking at what other people do and what their success is, and then trying to determine how we could do that on a smaller level, especially as GPU miners, which have a little bit more of an interesting position in this bear market with the impending Ethereum merge. Thanks for checking out this clip from the Crypto Mining Show. You can check out the full episode here or more crypto content down here. Also, I'd like you to check out my locals page at sonofatech.locals.com, where you can become a member for free or choose to be a $5 a month supporter that unlocks additional content.